So what do we do exactly for this particular MDA? We focus simply on momentum. It's one of the most important factors. It's one of now the most researched factors out there. I think in the last 10 years it has been the most researched factor of all time. There's various ways to view momentum. You can look at price, earnings, revenue, or all parts thereof. We don't. We focus solely on price and on volatility and nothing else. So absolutely no fundamentals come into the investment equation whatsoever. This particular chart extends back to 1800. I have recently redone this up to more recent data, and it continues to play out. So basically what this is showing is stocks that have the most momentum continue to persist, and those that have the least momentum tend to trend less, if you like. I don't want to be facetious when I say this, but you can't make money when the share price is going down. Yes, it can turn around, maybe, or maybe it won't. I think one of the best examples in my career was HIH. I should have actually put that slide here. HIH, most of you probably remember. It was an ASX 100 stock. It was one of the biggest insurance companies. It was a blue chip stock. It just kept going down and down and down. I've got some of the original research from the JB Weir analyst at the time, and he had outperformed literally all the way down. And the day after, even a week before, he had outperformed. The day before it went bankrupt, he said, funnily enough, this share price is acting like junk bonds. And the day after it went bankrupt, all he said is coverage ceased, and that was it. Thanks for your help. So this is a stock I have for one reason, and one reason only: it's going up. This is a stock I don't have for one reason: it's going down. It may turn around. If it turns around and starts going up, then potentially I'll own it. It's as simple as that. The way I like to explain this, to keep it simple if you like, is like a hitchhiker. That's basically what I am, a hitchhiker in the stock market. So let's assume, and we want to hitchhike from Newcastle to Brisbane. The first thing we're going to go and do is stand on the northbound lanes of the freeway, because I'm tipping a car in the southbound lanes isn't going to Brisbane, it's probably going to Sydney. So in other words, we want to be on the right side of the road. We want to catch the stocks that are actually going up. That's the first thing. The next thing is we're standing on the side of the road. We don't know what car is going to stop, okay? I've been doing this for 37 years. I have not met anyone that can predict what's going to happen in the future. I have no idea what's going to happen. I don't have to know what's happened. When I'm standing there hitching a ride, looking for a stock, I don't know which one is going to be the next one that comes along. All I know, if I stand there long enough, I'll get a ride. Same in the stock market. I don't know what stock's going to go up. I don't know where that's going to come from and what's driving it. I don't really care. All I do know is that somewhere there will be a stock going up, and it's just my job to jump on board that ride. How far that ride goes, I have no idea. We could get a ride that takes us to Coffs Harbour. We could get a ride that takes us all the way to Brisbane. I don't know. What I do know is if that ride stops and turns around, I'm going to hop off that ride. And that's all I do on a regular basis. Jump on those rides and take them for as far as they go. And the good example is what happened in 2020 with Tesla. And it kept going up and going up and going up and going up. And yeah, it was stupid, don't get me wrong, but it was going up. And as soon as it turned down, I got out. So it's ride them up, don't ride them down. That's pretty well what it's all about. So that's hitchhiking the stock market. That's the basics of what we do.